Hi, good morning, everyone, and welcome to the Let's Talk About Market session. Firstly, apologies for yesterday. For yesterday not conducting this live session. Actually, my PC crashed and I was not able to, fix it on time. That's why I couldn't do it. Uh, but anyways, let's get started because Nifty has been correcting for 4 days, and today would be the fifth day, and there are some important observations that I have to that I want to share, and which is important. Okay, mainly what we are seeing is that we are seeing some sector performance divergence, and what does it indicate? That is what broadly I want to highlight. Let me quickly share my screen, and you can let me know once you all are able to see my screen, and if you all are able to hear me properly. Okay, is my screen visible to everyone? And are you all able to hear me properly? Can you please confirm it? Can you please confirm it in the chat box? Okay. Thanks, GP. Anyways, so when we look at the Nifty index, basically, see what we were banking on was a breakout, firstly from this trend line, and then secondly, a breakout from this zone, right, which was an important resistance zone. So ideally, the perfect setup would have been, a breakout and a retest of this support. Earlier resistance zone, which is now a support zone, and then an up move. This would have been an ideal scenario. Okay, but what we have seen is that the Nifty index has, dipped a lot more from this resistance zone. So now, this creates a question whether is this up move complete? Are we going to correct and so on? All those sort of things will start popping up in our mind. But to all those people who have attended our sessions, we have spoken about it, right? That when do we concentrate on? See, all indicators will have some flaws in it. That's where we try and combine a lot more other indicators which complement and cover the flaws of the indicators which are giving false signal, right? So say for example something like this, when the RMI was rising higher, it had given a bullish crossover and it was rising. But when there was sell crossovers, we always focused during this time on the averages. Okay, and if the averages were holding, then we would normally expect an extension in the up move. But if the averages don't hold, then that's where you think of cycles being completed where RMI is going back to the zero line, and then we look forward from there, right? So we are currently in such situation where the RMI has given a bearish crossover, and but we are above the daily averages. So to me, frankly, the daily averages, which is say somewhere around 24,960 or so, that will be very, very important downside level to watch out for. And supposingly, even if it breaks on the downside, then I wouldn't expect it to stay below that for a long time. If it stays below that for say 2 3 days or so, then it might be a cause of concern. And the way that I'm looking at it at this point of time is, if I take the retracement of the entire move, so I am telling you the ideal, the important support level and the worst case scenario. Okay, this need not necessarily mean that we might go to those levels, but this is something to keep in mind. So, say for example, the 50% retracement level of this move comes to around 24,924 zone sort of levels. Okay, so take it as a round figure, 24,920, right? And the 61.8% retracement is somewhere around 24,800. Okay, now when you look at the hourly chart, why this zone is important is because on the hourly chart, if you notice, there was one small gap that the Nifty index had formed, right? And it was basically around this zone. Okay. So I mean, that's where I would expect that this zone to act as a very strong support on the downside. Okay. I mean, that is what the expectation would be. Now, if this I mean, if this support zone is broken on the downside, then there is some risk and some worry that we need to take in the near term. But on the hourly chart, so far what we are seeing is that the hourly averages are not broken on the upside, and it seems to be falling in a downward sloping channel. Okay. So break above this hourly channel will also lead to the break above the hourly averages, and that would be the point where we might probably say that the correction is complete. But till then, the slow and the painful grind is possible, and we will have to wait for this channel to break out on the upside. Okay. Now, you know uh, I mean, if you look at the sentiment indicators, so let us look at the sentiment indicators. Now, some of you may say that the swing has gone to the lower levels, and so there is a case of a pullback. Yes, that is definitely the case of a pullback. But as you are aware that we try and combine many other indicators as well for the short term to say that the short term bottom could be in place. So, say for example, if I do the swing, ideally if this averages hold, then I would expect that the up move can happen. But if the averages don't hold, then I would even expect the average swing also to come down to the lower levels. And also, if you see the diffusion indicator over here also, it is in somewhere in the middle. So at this top it had come to around 80-90. So there was some scope of a pullback, I mean, that we have seen. Now if this pullback translates into a much deeper one, then probably you might end up seeing this indicator also coming down towards the lower end, and also the percentage of stock with RMI. Okay, this can also come down towards the lower end. So if you want a if we want uh, to catch a bigger bottom where multiple indicator gets into the oversold zone, we are not there yet, because if you see the percentage of stock with RMI buy, it is in the middle. uh, Similarly, with percentage of stock about 20 SMA, also in sentiment indicators, basically the swing, average swing, if we do that template, so swing is in the oversold zone, but the average swing is still some time away from getting into oversold, right? So that's where I mean, the bounce could be expected. Okay, because swing is over here, but how durable that bounce will be will only be dependent whether we are able to break above this channel or no. Okay, at the max, what can happen is that there can be some pullback. Wait, let me remove the background. And at the max, what can possibly happen is, sorry, we might end up getting something like this, and we may still dip lower if all other indicators have to come to that oversold zone all at the same time. Okay, so that is how I am thinking about it. Now, one thing to note is that while the Nifty index is correcting, there are many indices which are actually doing well, and few of them we have already spoken about, right? So, say for example, let me take this trade setup. Okay, so if you see, sorry, CNX metal. Okay, this seems to be rising higher and now is almost back to its all-time high, right? That is doing very well. And some of you had named some interesting stocks like Hind Copper, JSW Steel, and all those kind of stocks, and they have actually done very well in this move. In fact, we also spoke about the PSU banks. That has also seen some breakout, and yesterday at least they were rising, but today we have seen some pullback. So in the early morning they all were rising, but towards the end we have seen some correction. And see, in all those things, even if a pullback happens, typically you would expect a pullback up to this range, right, which are like important support zones, even if you consider demand and supply. And the worst case scenario would be the averages. If these two things are broken on the downside, that is when you need to worry. But otherwise, they would be all okay. Now, there is particularly one or two index which is basically related, which is CNX Pharma, is where I'm particularly a little more concerned. That is because, if you see the up move, not that great, not even broken above the previous high, and the RMI is coming into the sell mode, and it is almost sitting at the trend line support over here. Okay, so if it breaks down this, then it's a cause of concern, frankly. Uh, so this is one. Uh, Even related to this is healthcare. Okay, CNX Health. Not sure what the symbol is. Hmm, yeah, Nifty Healthcare. Almost a similar pattern. So over here, probably the breakdown has already happened. So if you see over here, there has been a minor break in yesterday's trading session, and today it is trading below this average. And that's where this is a little more concerning. I was trying to find stocks, and the first thing, the first weakest stock which I saw was DV's Lab. What happened over here is that correction, consolidation, price is not able to break above the hourly average, daily averages and band. And now we're getting the crossover. This is not a good pattern to have. Okay, even if you see Sun Pharma, it seems to be lagging. Sorry, this is Spark. Sun Pharma, okay, it is lagging a bit, right? It has seen a significant correction from the top, and so far there are no signs of strength yet. Even if you see the weekly averages, it is below the weekly averages over here. So to find any sort of turnaround over here, you might first need the prices to break above the weekly averages, and it if that is done, then even the falling channel will be broken on the upside. So there are few weak stocks that I've spotted, even in pharma. And the other index, which has been a little disappointing, where frankly I did not expect that there will be correction. This sort of correction and retest of the lows, because I thought that given that it was trading above the 40-day exponential average, eventually it might end up seeing that up move because of the kind of shorts that we had seen. But this was the risk, if you remember, that we were discussing, that sometimes what happens in the if something is strongly in a bear market, so what happens is that, say, Tech Mahindra, okay, in all these cases what happened was that there was this minor short covering rally, okay, that played out. But now in this past 3-4 days of decline, there is again shorts that have been picking up. Okay, that is the case with Wipro as well. You can see over here the shorts are picking up. That is the case with HCL Tech as well. Okay, there has been some pickup in the stock. While I was seeing this, it was only Infosys, and I'm not sure if it is more to do with a buyback or something. But that's where we haven't seen that greater shorts yet over here. So can this translate into deeper shorts even in Infi? That is something that we need to see. But I think one thing is very clear, that IT did try to break above the daily averages. Okay, but the weekly averages were not broken. and I mean that is where it needs to probably break this, so that it will be out from the weekly downtrend as well. The the preference will be, you know, breakout from this trend line and weekly averages. That's where the setup can get interesting. Over here we were sort of preempting a pullback. It did happen, but not to a major extent, and it has been a disappointment. Apart from that, the other disappointment has been Nifty FMCG index as well. Okay, which did not break out as expected. Now there is a risk of this hourly RMI, I mean, sorry, the weekly RMI going into sell. And I was checking RRG for all these indices. Okay, and again, it does not look good. So if you see pharma over here, it has turned down. Okay, healthcare, it has turned down. IT has come to lagging. I think FMCG, okay, has flattened out. But yeah, I mean, these four indices particularly does not look good. There are other things like, say, small cap, mid cap, reality. Okay, reality also, it tried to break above the averages, but again it could not sustain. So if you see this is the reality index, and I'll show you the daily chart of that just to give you the context. What it did was that it broke above the 40-day exponential average, sustained a bit, but eventually it broke on the downside, and again this is not a good pattern to have. So anything where the momentum is falling, that is the place where we need to be a little more careful. And you can see indices like PSE, CPSE, PSU banks, these are all the ones where the momentum is still rising, and at least on the daily RRG there are no signs of reversal. Now I am also trying to combine this with weekly as well, to get a little more broader picture. So what I found out was that over there, mainly the financials, okay, Nifty Private Bank, Nifty Financial Service is the place where there is some minor uptick in the momentum that is seen. Financial service was the notable one, where a meaningful uptick has happened. But mainly all other indices, okay, apart from metal, that is where the dip in the momentum has started to appear on the weekly chart. Be it consumption, MNC, consumer durable, auto to that extent. So then, I was trying to check what are these indices saying. So auto also, it was an outperformer. Okay, it was an outperformer. And see, the RMI has been in sell for a while. 20-day becomes crucial. Okay, if this is broken on the downside, then it can get a bit more into further consolidation mode, where it can probably even come back to the 40-day exponential average. And in that process, it might end up coming back to the averages, and the cycle would be complete. And then we will see what it does next. Okay, so all the places where the momentum seems to be falling, I mean, this is where you need to be careful. So pharma appears over here also. Actually, I was looking at RRG only, and I saw all this, and then I started digging deeper into the charts, and that's where I found some patterns. Even FMCG, this is something that is not a good pattern to have. Ideally, you would want the momentum to turn around, to bet on the fact that it could rise higher or it can outperform. Similar with IT, there was some uptick in momentum, but then last week it turned down, which was again not a good sign. So basically, if we are seeing the index, it is sort of a mixed bag. Metals, PSC index, I mean PSU banks and PSC index, those are looking good. And surprisingly, I was looking at many other OMCs also. OMCs were looking good. So say for example, Hind Petro. I mean, this was constantly popping up yesterday, and there was some scanner, I think, that I had seen on which it had come. So over here also, if you see, there is more or less, a cup and handle sort of pattern that is forming, and even the RMI is on the verge of giving a bullish crossover. Okay, maybe this week or next week it can give a bullish crossover. So this, is sort of holding out, And similarly, I mean, there are many OMCs that are having such patterns where, the RMI can give a bullish crossover. I mean, within that pack, IOC is sort of a weakest one, which has not seen that bigger move. But yes, I mean, we are seeing this pattern. And more importantly, now I'm watching the range for the Nifty index. Okay, because that also should help me to get some clue. So when I do the combined OI, so as I mentioned, I typically have this habit of looking at the combined OI. So over here, 25,000 seems to be a rock solid support. I mean, if the Nifty index breaks below 25,000, then it's a worry, right? And even as I mentioned to you, the daily averages are at 2960 over here. So more or less, I mean, give or take few points here and there, you would notice that 25,000 on the future and on the spot levels 25,960 currently. I mean, these are very, very important support level on the downside. If you see small mid caps, they are all trying to bounce back from the averages. So they have already touched the averages. Okay. Over here, even if you see Nifty 500, so here there is some scope left, but small mid caps have already touched that, and they are trying to rise higher from there. Bank Nifty, it is relatively strong. So as you can see that the Nifty index was falling, but Bank Nifty is relatively stronger, and that's why we are seeing some uptick in the momentum over there as well. Uh, so yeah, I mean, it's a mixed bag. Few index are doing good, few index are not, and that's where I think it's very important to watch for the Nifty levels. I mean, if uh, the averages break on the downside decisively, okay, as I mentioned, if it breaks and even on the next day it sustains below that and trades below that, then it might not be that greater sign, in which case maybe a deeper retracement or some sort of consolidation, all those things will start popping our mind. Because if the markets are very strong, usually they will respect the support levels very nicely. Okay, so over here, if supposingly this was the range breakout and so on, it should have done very well. But now that it has gone below it, so the risk is that can it retest this and only then rise higher? I mean, those are all the things that we need to watch on an ongoing basis. But again, like I'm mentioning to you, it is a little more uncertain at this point of time. We haven't even got a reversal. So in such cases, it is ideal, to stay a little bit light. Only if you get an opportunity, you try to take some bets. But apart from that, it is a directionless market. Random things are happening. Some sectors are going up, some sectors are going down, and all those things. Basically, we are not seeing follow through in the sectors. And I mean, that is what the takeaway is for now. Uh, we can, discuss some questions if you'll have. But yeah, I mean, broadly, if you see, the market is not that great. I mean, we are seeing some sector specific moves. But broadly, many of the indices where the weakness is very much visible, that is, uh, broadly, I can say that it is defensive. So IT, pharma, FMCG, that is where the weakness is there. And surprisingly, when the markets are falling, some of the high beta sectors like metal, PSUs, and all those things, they are doing well. Now, how long can this trend persist? Need to see. But yeah, basically, these are the observations for today. So, anything if you'll have to comment or ask or clarify, please feel free and try to address it to the best of my knowledge. Okay, anyone has any questions? If not, then we can probably wind up the session today. So I'll wait for a couple of minutes. Okay, so I probably can't see any questions. So let's wrap it up for today. I mean, maybe the questions are not there because it's a dull market, but yeah, I mean, let's hope we get some confirmation. But as of now, okay. Uh, so okay, I got some question. GP Kalu, can you provide scan for the stocks where momentum touches zero after? So, GP Kalu, see, basically, we were finding some issues with the zero line. That's why what we have done is that we have given a RMI scanner where you can scan the stocks, okay, and you have the chart at the on the right hand side, okay. So that will make it easy because in such cases, what we have found out is that say many stocks what they tend to do is that they don't go back to the zero line, okay. So say something like this: correction has happened, it has not exactly gone to the zero line, and plus when we are trying to code with zero line we have to give a time frame, okay, that say within last 14-15 days it should go into zero line and all those things. So sometimes what may happen is that it might come to the zero line over here, but it might give crossover only after say 1-2 months, because it might remain subdued for a long time, right? So I mean, when we put all those conditions, we saw that many of the results were getting rejected, and that's where we thought that we should do this approach, where we give the chart to the people. Basically, you just simply click and get to the chart, okay. I thought, I mean, we thought that that would be the best way, so that people don't miss the stock, basically, okay. But I mean, if you ask me that how do we uh, find it based on the zero line, so far we haven't been able to code that yet. We'll try to find out if there is a better technique that we can put in. um, but yeah, I mean, that is the limitation at this point that we are seeing, and that's where you might have to do a new buy, new sell, and then click on the chart and see it. But we have given you multiple filters, you should be able to find it a lot more quickly. That is what I would guess. uh, Ranjan says how to spot FNO trades in live market. I think Mohitji had done this session on Sunday based on the strike over insights. But let me just give you one perspective. Okay. Now, say for example, I'm trying to now see there are two ways how we would tend to think of a trade. So, say for example, in technical scanners, there is something called as Bollinger Band. Okay. You run this on the hourly chart, the Bollinger Band expansion. Okay. Basically, this widening, and put it only on the FNO stocks. Okay. Now you can see over here that say Adani port. Okay. Here you can see that it is almost at the support level, right? It is almost at the support level and the band seems to be expanding. Now I might try to see what is the strike over inside saying and what is the possible range for Adani port. Okay, you can see over here the range is say 1400 to 1500, but however you can see that 1440 put is written over here, right? So I might want to see how this put writing unfolds. I mean, whether it is cutting and you know is it that, because see over here you can see that 1440 call and put both are having open interest search today, but in call it is a lot more higher, okay. So I would tend to imagine that if the prices sustains below 1440, then there is a risk that it can go down to 1400, right? So I have tried to find some data over here, and then I'll try to trade. So I'll so say for example I have this habit of looking at RMI. Okay. So over here you can see that the RMI is already in sell. Maybe the trade is late for here, but if at all say you're a price action trader, and if we get this trend line break on the downside, then the hourly averages can be the the resistance level, and you might look to trade either for this gap or towards this lower end. But of course, as I mentioned, you need to see the risk reward as well, because say for example, if this breaks uh, say around 1425 or so, I mean, even if you take that trade, so it will be a 15-point reversal level, and 10 rupees is the immediate level on the downside, and then it can be 25. So you need to see if the risk reward matches your uh, uh, you know your risk taking ability or no. Now say for example something like APL Apollo, okay, over here you're seeing that there is some sort of a flag, you call it a flag breakout or a resistance breakout or something like that, right, in APL Apollo. Now again, I'll be interested in APL Apollo. What is the range saying? Okay, now you see that it is near resistance. Okay, so you need to monitor. So maybe what you can do is that, see, now I'm just giving you one example. I mean, how do you manage your trade and all those things totally depend on your risk appetite. But the way I would think about this is that if the prices sustains above this, okay, I might want to take some position over here, and maybe once there is a break above 1700, in which case I'll observe what is the OI inside also. I mean, what is the call OI around 1700 also doing, because I can see that there is a shift that is happening, that people today are adding into 1720 more and not 1700. So maybe this will leave some room on the upside, and that's where I would be interested to see if it rises higher. And also you can see that the RMI has also given a bullish crossover, so I might want to see what can be the reversal levels maybe on the lower time frame and check it. But that is how I might think of it. Again, this would not be any intraday position as such, but it might take say 1 day to 3 4 days kind of perspective, and that is how you can find it. Okay, now sale has come to this. Now you can see that sale is in a consolidation mode, right? So here, this you might want to check it and keep it on your radar, that this is the zone, right? So say something like this is probably occurring. The best thing would have been that if this goes to the zero line and then breaks out, so in which case I might still want to check it, how is it doing. Okay, so I know that on the chart that it has seen an up move and now it is consolidating. So now I'll go over here and I'll try to see what is it doing. Okay, so over here also I'm seeing that at 140 there is a resistance, but at 137 there is a good put built up also that is happening. So I might watch the data over here and see if I'm getting an opportunity. But as you can see that there is highest OI addition today happening in 150. So is it an early sign that people are trying to shift from year to year? I need so that is what I need to monitor. So this data will sort of help you to tell the range of the stock, and you will have to fall back on technicals to find out some good setups. But early band widening, say on the hourly chart, can be a good setup to watch out for. Okay, in Ashok Leyland, I don't see any greater this thing, because I mean, bands are not as tight, but you can see in sale there is a pattern. Band also is tight, so here you can end up getting some interesting move. So that is how ideally I would think about it. But as I mentioned, you just go to the strike OI insights, which Mohit ji had done yesterday only. You might also end up finding it on Twitter. I think you have joined through YouTube, right? So in YouTube, if you go to strike underscore IT, we had done it on Zoom, and you can see this is the first video that you see over here, right? The only tool needed for the option trader, Mohit Agarwal. You can just go there. He has discussed in detail the option buying strategy. Uh, I think that will help you a lot. So just go through this, okay? But I just gave you the brief overview of how to think about it. Uh, Is there a specific time period during which one should buy shares during a day as the market? See, basically what we usually would recommend, or the way we think about it is trying to buy at the end of the market on the daily close is much more reliable, because as you mentioned that there can be whipsaws that can happen during the market. But if you go towards a day and that the definite close is somewhere over here, and then you can judge whether the breakout is happening or no. So it would either be on the hourly close, daily close. Basically, when those candles are closing, that is where ideally it would be better to take trades, so that you end up finding a much more reliable signal. Because what might happen is that say if a candle is forming between 10 to 11, at 10:10 the breakout might happen, but by 10:55 that might end up falling as well, right? So it might not look like a breakout at 10:55. So that's why maybe at 10:55 or 11, when that candle is closing, that is where you can probably think of looking at the trade. So that is just how we approach. I mean, many people have different approaches, but I just mentioned you how we think about it. Okay. A positive close today should be the last hope for the upside. As I mentioned, Pramod, see, I would think of this averages being an important support level. Okay. So, say for example, even if we end up getting negative daily close today, but we hold above this averages, then I think all hopes will not be lost. So it's only when the daily averages break on the downside, and when it breaks on the downside, I of course need to see how the short term indicators are also playing out. Because it is not that this breakdown occurs and it will straight away fall, right? It can also happen that the breakdown occurs, then there is a pullback, and then there is a downside. So that is what we will try to judge, even if the breakdown occurs, that how much more downside is there immediately. But as I mentioned, if the averages break on the downside, then this is the gap zone that you need to look out for. Okay, which will be an important support level, right? So that is how I'm thinking at this point of time. Raja Shaker, no, gold silver charts are not available. uh, if daily is above all moving averages, weekly RMI has turned buy, but below the weekly averages. Example. So, Mahesh, over here, basically that's where position sizing will come into play. Okay. Now, it depends on what time horizon you're trying to play. If you're trying to play for a medium term time horizon, then yes, you might want to add more when the weekly averages are taken out. Okay. But for the for this kind of stuff, basically, when the bullish crossover comes, okay, I mean, that's where you end up building some position. When there is a break above the 20 average, that's where you end up, adding some position. Then it's 40. That's where you end up adding some position. Now, this is provided you're looking at the daily chart, and your thinking is more from a medium term perspective. But as I mentioned, we always need to look at two time frames, right? In this case, because you're looking at weekly, I am assuming that you're looking at a larger time frame, right? So in such cases, I mean, similar thing happened with Nifty IT as well, right? On the daily chart, so Nifty IT, if you see the chart, it is sort of a replica of housing finance. Wait. So see what happened in Nifty IT. Okay. Daily, there was a break above the daily averages. Okay. And that's where I was hopeful that this time the up move should happen. But the weekly averages acted as a resistance. That happened earlier as well, this time also, and it fell down. Okay. So see, when you're trying to catch a falling knife, you want to ensure that if you're into the full position, then all the all the negative points are out of the picture. Okay, that's where you will have some peace of mind. But say for example something like PNB housing on the daily chart, it is definitely giving an indication of a turnaround. Okay, but will it sustain above this averages or no? And in such cases, if the RMI gives a bearish crossover, say for example, and the prices go below the daily averages, then there is a risk even of this low point getting revisited. And that's where you have to monitor on a day to day basis and look out for the opportunities. Okay, I hope that answers your question. Mitanshu, Ajay, not expecting a reshake recovery, but do you think would it test the 40 DMA? I mean, that is what the price seems to be suggesting because, the hourly averages, until that is not broken, there is a scope of a correction, right? And in correction also, you can see that the lower band is also around 24,960 or so. So if it does reach over here, what may end up happening is that the lower band is getting hit, and the daily averages are also getting hit, so that will be a good sign. I mean, whether it does or not needs to see, but ideally if it happens then it will be good. And what can possibly end up forming is some sort of an falling wedge pattern, right? Where we are seeing this contracting pattern, so then the setup would become even more interesting if it goes over here and tries to bounce back from there. So let's see how it unfolds. But as I mentioned, for any strength, from a slightly more positional perspective, it needs to break above the channel and above the averages. Okay. Until then, there is a risk that even if the bounce come, it might just be a bounce, and such slow grind can still continue. In cases of AB's AB Capital, can you explain when to trust the breakout? I feel miserably and I'm confused now how to take position. Okay, let me just try to check AB Capital. Okay, so I'm not sure in what context are you asking me, but I would imagine that this is still, trading almost at the high levels only. It is only yesterday that it has gone down. But now, this is the question that, someone else also had asked, right? When to take the position. So maybe during the day this might have broken out, but by the end of the day it has gone below the breakout point, right? So this is always the risk that we deal with, and that is why probably looking at say 315 at the holistic picture might make lot more sense. Okay, uh, I mean that is the only limited point I would want to make, that during the day it might have broken on the upside. Okay, but by the end of the session it has gone down. Now see, someone might say that what if the breakout would have gone up? I mean, breakout would have happened and would have gone up 10%. I mean, such things can happen. If that was the case, then wait for the retest to happen and be a little patient with that. But preempting a breakout, these are the risks that you will typically face. Okay, I mean, that is all I would want to say. But anyways, say for example, even if you would have taken position over here, assuming that the breakout would have happened, then all you know that we are dealing with probability, right? So in such cases, ideally the 40-hour exponential average would be your reversal level. Or because the cycles are not complete, then maybe you might want to tighten it with the 20-hour average. If the 20-hour average breaks, then there is a risk that further this consolidation can happen. I mean, that is how I would think about it. I don't know if that answers your question, but preempting a breakout during the day is always a little risky, especially when the Nifty is still falling. Okay, and there are no signs of reversal over there. Uh, how to go about 2 to 4 weeks delivery trades in which parameter? So DV, I think we have discussed this many times, but I'll still let you know. As I have told you, daily RMI it usually works very well from, 3 to 4 weeks kind of perspective. So in this case, say for example, if there is a daily buy, now, as I mentioned, you have to always keep into the context of the overall market, right? Now, see, I'm trying to narrow down my basket. Say I'm taking only Nifty 500 for now, but I mean, trade where you have the RMI below zero and it is turning around and the prices are above the averages. Those are, sort of the best setups to have. So, say Apollo Hospital, it does not really qualify for that setup because the RMI has not gone below zero, right? BEML, similar case. CCL, now see, this can be an interesting setup. That is because, the RMI has gone back to the zero line, prices have seen some consolidation. Now in this cases, maybe you might want to, trade in some stages, right? That if at all, the crossover comes, then you might buy some position. Now in this case, the reversal level will end up being this low, okay? And you might want to add more once the breakout occurs on the upside, because if this breakout occurs, this can be a good 3 to 4 months of congestion breakout that would be happening, right? Something like this. So so this can be an interesting setup and worth probably looking at. Mcure, not a good setup because it is below the averages. Godrej Industries, this can probably be a little more interesting. That is because, it is above the averages and there is a crossover also that is happening. And maybe you might want to add on to the position a little more when you end up seeing a breakout above this trend line. Okay. So in such markets, position sizing is important until and unless you don't have a very very clean setup. Okay. This again is not that great. Vedanta not that great. VGuard again not that great. So not, no, we're not really getting those ideal setups. Wait, let me try and find if I can, try to find if there are some ideal setups. But anyways, I hope you understood what where I'm getting to. Okay. Again, not a good setup. We already saw Patanjali, not that great setup. I think Godrej Consumer is the only one that is good. Now, you might also not want to chase such sharp moves. Wait for the pullbacks to happen. Again, not good setup, not that great setup. So, sadly, today we are not getting any good setups, but I hope you understood what we are trying to look at, right? Prices trading above the averages. In that, CCL had a good setup in that sense. Basically, it was consolidating, but, such setups are worth keeping on the radar. So, yeah, I think that's all. We have almost gone to 50 minutes. I hope you all were able to understand uh, the things that we discussed, and I hope I was able to clarify your doubts as well. So let's wait for tomorrow. I mean, as I'm speaking, we are seeing Nifty breaking the 25,000 mark. So watch out for this level on the downside, which is say somewhere around 24,950 to 940. I mean, if that is broken decisively on the downside, then we might be in some sort of trouble. Need to see how things unfold. Okay, basically, we also need to see how other indices are also closing to make sense. But yeah, that's it for today. Let's check the levels tomorrow, right? Let's try and check the levels tomorrow, and then we'll see if we are seeing any decisive move or not. So thanks once again, and see you tomorrow.